What's going on, guys? It's your boy Stock Scrubby back again with another stock market update video. Today, ladies and gentlemen, the Fed is finally gonna do something other than just printing endless amounts of money, and some retailers are updating and lowering their forecasts, so we're gonna talk about it. Let's go, baby! Stock market, let's go, yes, wow, ew, investing. I'm getting quiet now. Lay low when you reach some pipe now. Before we get into this, it's not financial advice. I'm an idiot talking over gameplay. That being said, the stock market's interesting, so I do this for entertainment. Let's go. All right, now, ladies and gentlemen, I'm not gonna lie. I knew the Fed meeting was gonna happen today. For those of you that don't know what the Fed is, they're the people in charge of printing money, and I knew they were going to probably announce they were gonna have to raise interest rates for borrowing money soon, just because inflation's going crazy, but I didn't expect them to do it as aggressively as they announced, which I think's a good thing personally. Fed will aggressively dial back its monthly bond buying, sees 3 rate hikes in the next year. The Fed will be buying $60 billion worth of bonds each month starting in January, half the level prior to November, and $30 billion less than it bought in December. The Fed is tapering by $15 billion a month in November, doubled that in December, and is going to accelerate reduction further come 2022. After that wraps up in late winter or early spring, the central bank expects to start raising interest rates, which were held steady at this week's meeting. Alright, so all in all, I think rate hikes just had to come in. It's never been this cheap to borrow money for this long, and the only way to really cool down the economy and get that inflation back under control is to raise interest rates. I know people don't like that, but it is what it is. Hopefully, the rate hike also gets the bond market to be a little bit more viable, so there's a little bit more competition for places to put your money other than just stocks, real estate, and crypto. And beyond that, I just think overall getting inflation under control is the most important thing. Personally, yes, I do own stocks. That being said, I'm willing to sacrifice a little bit of my growth over the next year or two if it means that inflation gets back under control and the average person isn't going to be in a situation where life's just going to suck. I feel like high inflation is usually a death sentence for countries, so the fact that they're going to do something before we reach hyperinflation should be a good thing. At least I hope so, all things considered. I guess I'm not an expert, I'm not in the Fed, but I'm hoping this is a step in the right direction. Don't be surprised if there is a correction off this news, though, that being said, because companies having to pay more to borrow money isn't a good thing for their bottom line. Alright, moving over to something else. Lowe's was on an absolute tear last year and this year so far, just because people were home spending a crap ton of money working on their houses because they weren't in their offices for 8 hours a day, but it looks like that may be coming to an end. Lowe's says pandemic-fueled home improvement demand could cool in year ahead. This is basically the same thing that I think happened to a lot of streaming companies last year, and a lot of companies overall is they grew like insane. They blew expectations out of the water. They were selling things like crazy hotcakes. But yeah, everyone was home for like a year straight. So obviously, you were spending more money on streaming services. You're spending more money on home improvement. Lowe's is the latest retailer to talk about this, but I do think this is an impact that we're going to see for a while. Just like companies that went nutty last year, maybe not having as fast growth anymore because they grew so fast for a bit. Truthfully, if you're invested in Zoom, man, I know that they're crucial now, but how do they grow? How do you grow from the entire world being shut down? And that directly leads into our next story, which is another company that I feel like has the same thing going on. Roblox stock dips on lower than expected November users. If you're going on a year-over-year basis, you got to remember that there's a lot of holidays, family stuff going on in November that really couldn't happen last year, didn't happen, people didn't travel, couldn't travel, that type of stuff. And obviously that's still at play this year. But yeah, I'm not surprised that there was less people this year in November spending time on Roblox than last year, because last year was just an outlier, man. You can't really take last year and make it the benchmark for a lot of these companies because you're gonna be sorely disappointed simply because, it's not their fault, but last year was nutty for Roblox. It was nutty for companies like this. You can't really look at a year-over-year basis on a one-year level and be like, man, there's less people playing the game on a major holiday month than when no one could go anywhere. Maybe that's just my opinion, though. Someone in the comments is probably going to make me look like an idiot. It is what it is, but that's just my opinion. Moving over to something that's been moving for a little bit but is going to continue if you're invested in Chinese companies, I got bad news. It looks like most major analysts are in agreement that it looks like they're going to be delisted very quickly. It's game over for US listed Chinese companies, Global Asset Manager says. Obviously, there's going to be some things still listed on the Hong Kong exchange, and I know there's another one that I can't think of right now. Shanghai? I don't know. Sorry, that's going to make me look bad. Whatever. Either way, though, there is a lot of things direct listed on NASDAQ that are going to be drastically affected by this. I know for a long time there was a lot of growth coming out of the Chinese investment market that was US listed, but it looks like they're going to be severely cracking down on that, forcing delistment, which, if you're in those companies right now, get out while you can. Chinese companies listed on Wall Street will likely be cut off from U.S. capital markets in the next 3 years as tensions between Beijing and Washington persist, according to David Lovinger from the TCW Group. He predicted that by 2024, most Chinese companies listed on U.S. exchanges were no longer going to be listed in the U.S. Honestly, I'm not surprised. They've been doing this for a little bit. They've been cracking down on publicly traded companies in general over in China for quite some time. They've been doing quite a lot of rule changing and restructuring of things. So, I can't really say I'm surprised by this. Plus, usually I'm against China doing things that, hurt the US. And I'm not 100% sure this is true, but I'm gonna assume it's something. If they can have a bunch of investors putting money onto their currency exchanges and investing on their markets, I'm sure that they can tax it a little bit differently than companies that are publicly traded overseas. I'm not 100% on that. I'm just going to assume that there's a reason that they want these Chinese companies on a Chinese exchange. Probably something with government control, considering that they are a communist country and have control over all companies, basically. All right, in our last major story, we're heading over to crypto because the UK has officially cracked down a little bit on their advertising. Crypto ads banned by UK watchdog for failing to highlight risk. The Advertising Standards Authority said the ads were banned for irresponsibly taking advantage of consumers' inexperience and failing to illustrate the risk of the investment. The banned ads include a website and Twitter post from a pizza chain, as well as a digital poster from a crypto exchange. Companies targeted by the bans include eToro, Coinburp, Coinbase Europe, Luno Exchange, Lumo Money, Exmo Exchange, Payward, and Papa John's GB. Alright, obviously, if you're advertising an investment, I think it's important that you let people know that, investments are risky, you can lose your money. You also should know that if you are investing, I'm just saying that. But can we talk about how funny it is that, this list is all these crypto exchanges, probably got billions of dollars of currency going back and forth on a daily basis. And amongst all of those is Papa John's Great Britain. The 14th best pizza place in Great Britain is on this list as well for violating cryptocurrency ad regulations. Did Papa John's tell you that if you buy a pizza, you'll become a billionaire? What in their advertising was too risky that they needed to be lumped into the crypto exchange? I don't know if they were involved with crypto. If they are, that's also really funny, but you guys get where I'm coming from, right? What did they possibly do as a pizza franchise to be listed amongst all these exchanges? I'm not surprised that they're starting to crack down on this. I feel like a lot of crypto ads paint out that investing in crypto is risk-free. You're just gonna print free money. And I'm not even hating on crypto. Like I said, yeah, I never want to come across like that. I'm just saying that any investment carries risk. It doesn't matter what the investment is. You could tell me that you bought land. Okay, if the market crashed tomorrow, that might lose value for a bit. So yeah, if you're making ads that are just way too over the top saying people aren't gonna lose money, it's probably good that you're being told to dial it back a bit. But anyways, guys, I think that's going to do it for the news. We're going to go over the major indexes here. Dow Jones up a little bit, S&P 500 up about 1%, NASDAQ up 1.1% currently. Still a little bit of wiggle room left in the trading day. That might change, but it looks like they're up after the Fed decision. I'm not necessarily surprised. I think the scariest thing about the Fed decision today was that we didn't know what they were going to do or when it was going to happen, but now that we at least have a roadmap of what and when's going to go down, I'm not surprised the market rebounded a bit. We all know the scariest thing as an investor, if you're in the market, is not knowing what might happen or what could happen. So obviously just, knowing what the Fed's going to do is a step in the right direction. But yeah, hopefully you enjoyed it. If you did, let me know in the comments section down below what you thought. I'm really enjoying doing the stock stuff, so please comment if you're watching it. It helps the videos do way better in the algorithm, and I know to keep making them. If you enjoyed, like, comment, subscribe, all that good stuff. And while you're at it, if you want to help me out, check out the intro song down below, along with the link to my podcast, The Scuffed Cast, or you could use code SCRUBBY at the G Fuel checkout if you haven't already to get a discount on G Fuel. Last but not least, 2 more things that I gotta plug. I did go ahead and put some of my story times up on Spotify, so you can check those out. Link down below if you want to listen on offline or without gameplay. And the top link in the description is going to be the Karen Christmas sweater. If you get it, you are 100% guaranteed to be on the nice list this Christmas, so trust me, it's a worthwhile adventure of your time. Anyways, guys, I think that's going to do it for the video. Don't get anyone pregnant. If you do, make sure they're hot, and hopefully I'll see you guys next time. I'm out. Peace, and remember, this is not financial advice.